Today, we're diving into one of the most powerful paths to financial freedom, home ownership. Right now, we are about to do another episode with financial wellness with Resheka Mahadow, where she helps us win our financial freedom. So, have you ever wondered how owning property can transform your financial future? Well, recent studies show that over 70% of first time buyers feel overwhelmed by the mortgage process, and many are still trying to figure out where to start. So, of course, right here on Personal Finance on the Vuga Breakfast Show, we always try and give you relevant and insightful conversations with professionals and experts in the field. So I am thrilled to welcome back Rashida Mahadow, joining us for the third time. So if you've been here before, you know that she always comes in with those powerful insights. So again, Rashika is a powerhouse, an experienced functional coach, business consultant, speaker, and mortgage broker that we found out on our last episode is also known as a bond originator. As the founder of Forward and Upward, she's transforming lives through mindset shifts and financial empowerment. And through her work at Phoenix Bonds, she's been guiding home buyers and property investors to secure their dreams. So today's segment is all about home ownership, mortgage clarity, and using property as a powerful tool for financial freedom. So we'll be breaking down key steps. So from understanding the role of a bond originator and navigating the pre-qualification process to practical tips for getting financially ready to buy your first home or investment property. So get ready, Virgo Nation, for an insightful and inspiring conversation that might just spark the give you that spark that you need to take that next big step in your financial journey. Of course, Rashika, you know what? As we've been discussing financial wellness on the show with you for 3 episodes today. For those of our listeners and audience who are new to the property game, can you kick us off by explaining what exactly is a bond originator and how do they help someone navigate the process of buying a home?
Okay, thank you. It's nice to be here, TC, and good morning to all you listeners. So let's look at it like this. When one begins the property journey or looking for a home, it can often feel like you're in a maze with all the legal jargon, bank jargon, forms, fees, the various parties involved, and all the moving parts. Now, generally, one is doing this whilst also in most cases, making one of the most important financial decisions of their life. So it's quite a stressful place in terms of understanding, and that's where a bond originator, also known as a mortgage broker, comes in. So basically, the easiest way of understanding it is an agent helps you to find the property or your home.
Yes.
A mortgage broker helps you to finance that property and helps you with strategies in terms of how you can acquire that property. So a mortgage broker helps you to get finance in a smart way. Now, a mortgage broker is also someone that helps you understand the fine print, translate all the jargon into simple language so that you understand, and basically handhold you through the entire process so that you understand what is expected of you throughout the entire process, and also ensures that you feel safe because it is quite a complicated journey if one is not familiar. So I'd leave it at that for now, and we'll expand in terms of more aspects of the bond originator. But the simplest way of understanding it is an agent, although the agent helps the seller, does also help you, the buyer, find a property, but a mortgage broker holds your hand through the process and helps you to acquire the finance on your terms.
Wow. Okay. Thank you so much for that clarification. Definitely, it has put things into perspective for what we are about to discuss
Mhm.
today. So, let's say someone's just starting to toy with the idea of buying a home, right? What's a realistic first step that they can take? What should they do before diving in?
Okay, so it's normal. Of course, we're going to go to the apps and to the websites to see all the
Of
properties and the
course.
bells and whistles that uh, tantalize our eyes, which is great. And
True.
that's a wonderful place to be, but it's not the realistic first step. The realistic first step, if you've come to know me by now, is always awareness. And I would say start with understanding your income, understand your expenses. And by expenses, I mean your living expenses. And then, most importantly, over and above that, understand your debt. Reason being, you want to know how much of your income is committed to debt. And then, your next smart move thereafter is to do what is called a pre qualification. And the pre qualification is basically to help you to understand what is your buying power. That's something a bond originator can assist you with.
Okay, okay. I hear this term pre-qualification as often as we've heard the term pre-qualification being thrown around. So, I mean, what does that actually mean, and why is it such a crucial part of the home buying journey?
So it is, it's important, and I'm glad you used the word crucial because it is. It's an exceptionally crucial part. The pre-qualification allows you or assists you as the buyer to buy wisely, to buy smartly, as opposed to buy blindly.
Oh, wow.
So it's simply can be equated to like a stamp on your financial passport. Basically, it tells you and it tells the seller what you qualify for in terms of value. So it gives you buying power in terms of negotiating. It also presents you as a serious and eligible buyer as well. Now, in addition to that, you are now equipped to shop for your property with confidence, and it prevents you from tarnishing your dreams in the future and helps you to plan properly. So, if you don't have a pre qualification, you could ideally be wasting your time as well as the agent's time and the
Time.
seller's time as well.
Ah, okay. Man, at least now you've put that into perspective. So now let's talk about the bank versus, bond originator. So when it comes to securing a home loan, what's the real difference between applying directly through a bank and then working with someone like yourself who is a bond originator? So how do those parts compare for someone's just starting out?
Okay, sure, that's a great question. And that's actually a common mistake that most people make. So, of course, you can go to your bank for a bond, and that's not uncommon. But I would equate it to the same as wanting to buy a motor vehicle and only going to one dealership.
Mm,
So
okay.
you go to one bank, you get one offer. That's not a terrible thing, but it's not the full picture. Here's the reason: your bank has historical information on you. And unfortunately, your bank does not forget that information. So if you had challenging times through your um, life and your journey, including, for example, like when you were a student, that information is all held in record. So when your bank assesses what value you can afford, what they're looking at is your historic information, not only your current information. And if that is unfortunately negative, it's held against you. Not directly, but it is factored in. However, when you go to a bond originator, the bond originator looks at your current position.
Mm,
So, for example, if you are self employed, it's the last 6 months or to a year. If you are salaried, then it's the last 3 months. So it's a much more current view and a realistic view, therefore giving you a better chance. The other reason why you don't only just want to go to your bank is, like I said, one bank, one offer. A bond originator basically goes to multiple banks on your behalf and does one credit check only.
Mm.
So, one credit check basically spread across various banks, and therefore you have multiple offers. And the bond originator also helps you to negotiate, helps you to get the best deal. Whereas your bank is just looking at you as a customer who's applying for a transaction and no different from any other person.
Mm. Wow, okay. Well, I know that for me, that makes so much sense because I mean, where I am now compared to where I was earlier in life is not the same place.
Absolutely.
And of course, I would want you to obviously judge me based on what the person I am right now, and
Absolutely.
obviously not on my past. We all know that.
And if,
So,
sorry, TC, if I may just add, that the service of a bond originator is
yes.
free.
Ooh,
So,
lovely.
it's important to know that this is a free service that actually empowers you. And
Wow. Free service. Do take advantage of that. I know that many listeners and watchers might still be starting or studying out in their lives or early in their careers, right? Is it possible for you to be involved in a property purchase at this stage? And how do credit applications come into play, without denting a person's credit score too much? Because I mean, we spoke about that in our last episode.
okay, so there's two parts. The first part is, as a student, provided you 18 years and above, then you're legally allowed to contract debt, provided you can pay for it, obviously. So if you are a student, yes, it's possible if you have income and if you are of the legal age. Now, you could be a student, you could be a spouse, a similar type of thing. It's
Well,
called.
when we talk students, we're talking perhaps, college, university, those kind of students who are, of course, going into higher educational studies.
Absolutely. So it's then basically of legal age. Absolutely. If you're of legal age and
Yes.
provided you can pay back the debt, then absolutely there is no reason why you cannot. In terms of how this affects your credit score, irrespective of your age, like we've mentioned in the last conversation, when your bank does your credit score
True.
or a bond originator does your credit score is not necessarily affected. So a bond originator will do one credit score and use it across multiple banks. And remember, you have one free score per year. So there's no impact. However, if you had to go to multiple banks and apply on your own, then yes, there would be an impact on your score
Oh, okay.
because you are touching multiple points.
True. True. We did discuss that. And of course, if you are looking for that conversation, you can go back in on our channel, on the YouTube channel, Vuga Breakfast Show, on our Vuga clips, and catch that conversation and get up to date on how the credit score and everything that has to do with your credit is vetted and how that process can be tackled. Because financial wellness with Resheka Mahadow is always packed with some useful and practical financial hacks and tips. So I know that we've been talking about the bank, right? So now we're going to talk about the bank's decision criteria, right? There's always a bit of mystery around what banks look for. Can you break down for us what factors banks consider when they are making the decision of whether someone qualifies for a home loan or not?
Sure. So a bank assesses you the same way that a bond originator is going to assess you. Hence, it's called a pre-qualification. And it's important to understand that at this point, the bank is not judging you. They are, however, assessing your money muscle. And that's exactly what the bond originator is doing. The aspects that they would look at is, again, your income, your expenses, your debt, and most importantly, your credit score, because it tells one how you've handled credit in the past
Mm.
and whether you've been able to repay back. Now, when they're looking at this, What they're also looking for is basically, do you have sufficient income in order to meet this debt? So, if a lot of your income is tied to debt, then the likelihood of being approved for such a loan is unlikely. And last week, we also spoke, or in your previous segment, we also spoke about what's an acceptable level of debt.
Yeah.
So, if your debt is 30%, it's still reasonably okay.
Okay.
33%, you're starting to touch on borderline. It's not really comfortable. Above 33%, I would say start looking in terms of how you're going to improve that if property is in your future plans.
Yes, because I remember in our last conversation, you said when you're at 40%
Times
of your debt compared to your salary, you're in trouble.
yes.
So, I mean, now let's go on to joint ownership and explaining that. And so I know that sometimes buying property isn't a solo act.
That's right.
So, for anybody who is, of course, married or teaming up with a partner or a parent, what does joint ownership really involve, and how does it benefit or complicate the process or things?
I'm so glad you said complicate as well, because absolutely, it's a beneficial process. And you can apply for a bond with basically anyone else, your partner, life partner, parent, sibling, even a business partner.
Oh,
You can apply, and it's called a joint bond application. Now, what that means is basically every person is equally liable for that bond. So each person in that application is assessed in their own merit. Now, people would do this for a couple of reasons. It could be that they want to qualify for a higher bond, or it could be that they don't qualify and they need the additional support to qualify for a particular bond. Now, what's important to remember, as you said, it does come with complications. It's important to remember that whilst one person would be nominated as the primary account holder, so whose account the debit would ideally go off, it does not mean that the other parties are not responsible. So if that one party does not pay, the other parties are held 100% accountable for that bond payment. That's the first thing. The second thing to also remember is when joint applications are done, it's easier when it's a spouse or a living partner. But when it's done with siblings, friends, business partners, or parents, and you're not necessarily living in the home, or you could be living in the home, it's so important to have a legal understanding and agreement in terms of the rights and the responsibilities of this property, as well as what would happen if one person wants to buy out of this property, which happens
it really
often.
does happen.
So, in this instance, yes, it's very, very possible. So, I would leave you with this thought if you're thinking about it. If you're going to share the keys, then make sure that the plan is also shared and understood.
Hmm. If you're going to share the keys, make sure that the plan is also shared and understood. Powerful advice right there. And I agree with you. So I know that right now we're talking about, the handling, the bond application. But now let's talk about handling a declined bond application, right? That's a tough topic. So, what happens if a bond application is declined? What are the next steps, and is there still hope for moving forward in that scenario?
Yes, so the good news is yes, there's hope.
Ah,
And the better news is that the National Credit Act, in fact, Section 72 of the National Credit Act, protects you as the buyer. So if you're declined for a loan, it is your right to receive a reason for that decline. And if you don't receive that reason, you're welcome to cite Section 72
two.
of the National Credit Act. So the reasons could be various. I mean, the reasons could be affordability, it could be non-compliance, it could be lack of documentation, it could be affordability. Now, whatever the reason, it's important that you understand that reason. Reason being, you can appeal,
Mm,
you can fix the issue, or you can apply elsewhere. Now, that's why it's important to understand that a decline isn't the end. It is just a
it's
redirect at
redirection.
this point. Now at Phoenix Bonds, this is why it's important to work with the bond originator. We understand and we explain the reason to you in terms of this decline, but we don't necessarily leave it there. We work with the client in terms of a strategy of how to reapproach this to fix the issue and handhold the client through the process. So definitely there's opportunity. Remember, a decline is not a defeat, it is a reroute.
A decline is not a defeat, it's a reroute. Powerful words. I love that. So I know that now, times are tough in South Africa economically, and everybody wants to save where they can. So let's talk saving on interest. For those looking to save a little bit of extra money on their mortgage, what's one practical strategy you'd recommend as a bond originator to cut down on interest or to even shorten the bond term over time?
Sure, that's a good one. I can tell you this from my personal experience with properties and my properties, as well as a bond originator. The simplest and easiest way to do that is to make payments, smaller payments, additional payments monthly. You would be surprised at what an additional 200 Rand extra can do in terms of shaving off years as well as thousands of interest over the trajectory of your bond. So um, don't ignore that. Pay attention to that. An additional way to save is if you do have a bond, existing bond, and you've paid up your bond, then look into discussing with your bank in terms of keeping your access portion available in terms of refinancing.
Oh,
But
yes.
definitely start with the more additional payments every month, whatever you can afford, and you will see the difference.
I bet you can, because
Absolutely.
saving money is crucial for anybody. I mean, since we're on the topic of financial wellness, saving money is a good way, to achieve that little bit of financial freedom.
Absolutely.
So, with the awareness of upfront costs, beyond the purchase price of a property, right, there are so many hidden costs. Could you walk us through some of the upfront expenses buyers might not be aware of?
Absolutely. And that's such a good, important one. So, yes, remember that apart from your deposit, which in most cases might be required,
I know a
would be,
friend of mine who bought property. I know he wished he would have known this before getting that property.
and most people unfortunately don't. Now, that's another reason why you want to work with a bond originator, because we advise you and guide you and ensure that you are prepared for this cost before you enter into such a transaction so that this does work smoothly. So remember, the price tag is not the full bill. And what you need to be prepared for, as I said, over and above your deposit, is there is what is called transfer duty.
Oh, yes.
So now transfer duty is calculated on the price of the property, and that's basically a tax. Over and above the transfer duty, we will need to pay bond registration fees. Then there is attorney costs, deeds office costs, and bank initiation costs. Now, all of this varies depending on the property price, but if one had to budget for it hypothetically, I would say look at about between 8 to 10% of the property price and ensure that you have these funds in order to support the process through that. And again, if you don't understand what this means and at what stage you need to pay it, or the values. And remember, you will be getting confirmation from the banks and from your attorneys of this. But if you want that information ahead, work with the bond originator.
Ah, the ones that save the day,
Mhm.
the bond originators. So while we are still on that topic of costs, right? So owning a property is, of course, a long term commitment.
Yes.
So, what are some of the monthly recurring costs that some new homeowners should be prepared for beyond the bond payments?
Yes. So, yes, owning a home or owning property definitely gives you freedom, but with that freedom comes additional financial responsibility. And buying the home or buying the property is the first step. The next smart step is budgeting for it so that you can maintain and sustain the property. So, some of the costs that you want to look at is municipal costs that would be attached to the property, like rates and taxes. Over and above that, you want to look at homeowners insurance, as well as repairs and maintenance to ensure that your property holds its value.
Of course.
And things like security and levies are also things that go unforeseen. Another cost that I'm thinking at the top of my head, it's not necessarily something that people don't have, but if you don't have life insurance and the
Ooh,
bank now requires one, so budget for that additional cost as well.
really? Life insurance plays into property ownership?
It could play in terms of security in some cases.
Wow. Okay. I definitely didn't know that. Of course, always keeping me and everybody else updated on those useful tips when it comes to finances and, of course, investment and on property. So, now when the bond payments start, let's talk about that. So, after a bond is approved, when do the actual payments kick in? Is it right away, or is there like a waiting period before your first bond payment is due?
There is a bit of a waiting period, and it's a good one to also plan for and understand. So, your first bond payment is generally 1 month, plus minus a month, after the property is registered. So, that's a good idea in terms of gauge. And in terms of when the property becomes yours and when do you actually does your interest and calculation start, that only happens on registration. So basically, you are not liable until registration. So until the property is yours, there's no bond associated cost, but once it's registered, it is, and your first payment is generally a month after registration.
A month after registration. Okay. Well, of course, finally, our last question here with you on the segment. It's let's zoom in. Let's zoom out actually for a bit. Property is often, touted as one of the best ways to build long term wealth.
Yes.
So, in your view as a bond originator, why does property remain such a powerful investment, and what makes it such a cornerstone in the journey to financial freedom?
It's a good one. The reason is property is not just a place, it is a plan.
Ooh,
It helps you to build wealth. So, whether you're living in the property, whether you're renting it out, using it for business purposes or other income generating purposes, your property is increasing in equity. You are attaching wealth to it. And in the same process as you are paying off your bond, your property value is appreciating. In that word, where you are also attaching equity to it. Now that equity becomes something that you can use to refinance, you can use to retire well, you can use to do whatever you wish to in your life because it is equity, hence it is powerful. Now, the other reason it is powerful is it's because it's not fast. It is secure and it is steady, therefore it's powerful.
it is steady, therefore it is powerful. I can quite agree with you on that because we see that in the townships more and more people are using property as a source of income,
Yes.
especially because of, the social housing. If they've got like a property or a stand, they will make like rooms at the back, and rent those out as a source of income. So you are quite right, we see it happening in our everyday lives here in the township, and we see that it's becoming a powerful tool for
Yes.
people to achieve financial
Yeah.
freedom. So I know that the Vuga Nation has some questions for Resheka Mahadow, but you know what? Let's take a short break. And after that, she will be answering some of those crucial questions from you, the Vuga Nation. And we're back. Let's get those questions to Rashika, with the first question being from Zinzi. So let's hear her out.
Hi, my name is Zenzi, and I have a question around having to extend my property in the near future by adding an attached garage to the property. And I'd like to know what steps should one follow in terms of having to notify the municipality as well as the banks, and are there any risks associated when one is taking that step? Thank you.
Important question with regards to understanding how to approach that. So, if I understood the query question, it's about an extension to an existing property.
Property, yes. I want another, just to add to that question, I want to know if that would, when she has to sell that, would that actually affect her resale value or anything when it comes to reselling that property. So
A good addition to that, absolutely, TC, and the answer is yes. So, in terms of what would be the first step, definitely the first step would be, it does not matter what you're doing on your property. Ensure that you have plans drawn up by a um, qualified architect or draftsperson. That's the first important step. Then you have to have these plans approved by the municipality. Now, it's exceptionally important and ties into what you've just asked, because it does affect the value when you are intending on reselling, and in fact affects the process if you don't have proper plans and documentation. So definitely let the municipality know, ensure that your plans are approved before commencing. Then if you do have a bond, let your bank know. It's important that you let your bank know. Reason being is that your bank will want to most probably have these plans to understand what you're doing, as your property value is going to change.
mm,
Then the bank is in all likelihood going to want to reassess or revalue your property, which then also means that if you have insurance, then your insurance also changes. So it's important to look at those aspects. Now, whilst you're doing this building or maintenance or renovation on your property, ensure that you have insurance for this work whilst it is commencing. The insurances that you currently have is unlikely to cover what's going on in terms of the progression of this work. And lots of people come short in terms that they don't have insurance for the work that's carrying on. So that's something else to look out for. And then of course, make sure that you use excuse me, you use um, qualified, skilled people in terms of the work that you're
of
doing. Yeah,
course.
approved.
That's quite important. I hope, Zinzi, your question has been sufficiently answered right here. And of course, I know Rishika always gives the best advice when it
Thank
comes
you.
to financial wellness. And of course, she is a bond originator from Phoenix Bonds. So she's qualified to give advice on home ownership. So again, I know we have a second question for Rishika right here from Nelly.
Hi, Rashika. My name is Neliswa. I do have three questions. The first one is, what are the risks and benefits of a joint bond? The second one is, I don't know if it's going to make sense, but how is the monthly payment split amongst the two? Is it like 50-50, or is it calculated according to the individual's salary. Like when I take home like 20,000 and my partner takes 10,000, will it still be 50-50, or is calculated according to our salaries? And then my last question is, what are the implications of selling the property after it's been fully paid for? Thank you.
Keep me honest.
Ooh.
Keep me honest so that I remember these questions. If I remember correctly, the first one is, what are the benefits of buying jointly? So there are definitely benefits, and one can buy jointly, as I
As we've
mentioned,
spoken about, yes.
just obviously in terms of be of the eligible age and be able to repay the bond. Now, in terms of who you choose to do a joint bond application with will affect the outcome. So if, for example, you are doing a joint bond application with someone who has a low credit score,
Okay.
or has negative financial history, that will negate your application in terms of what you qualify for. So it's important to understand that. So the answer is yes, but there are limitations. In terms of what to be aware of, we also discussed that it is a joint bond application, but there are rights and responsibilities outside of the property which needs to be clarified and agreed to. And in terms of responsibilities of payments, so basically, you can apply with more than one person can apply. However, there is a primary person that is the applicant. So although everyone is assessed on the same merits and in terms of responsibility, hold the responsibility equally, there is one primary account holder. Now, that person would ideally have the bond go off their account.
Okay.
Therefore, it's important to have this agreement in terms of what is the breakdown or the ratio of payment between the other parties. So I hope I've answered the second
Yes, you
question.
have.
Then the last question, if I remember correctly, is if you're selling
Yes,
a
so now
home.
if it's paid off, and you want to resell, and of course you're in a joint ownership agreement.
So if you're in a joint ownership agreement, hence you needed to have this agreement ahead of time, because if there's one person that doesn't want to sell, then you're going to have a challenge
Ooh.
in terms of selling the property. All parties have to agree if you want to sell the property.
Even if there's one main applicant.
Even if there's one main applicant.
Oh.
It is a joint bond, which means the bond or the property is in the names of all the applicants. It's only for financial transactions that it goes off one person's bank account. Therefore, you need that legal agreement to have that understanding in place before you get to that place. Now, if the home is fully paid off, then it's great. You don't obviously, there's not going to be a bond cancellation fee. So
Yes.
that's one plus. There's not going, in terms of whatever you sell the property for, less standard costs of the sale of a home. The rest of those funds is your profit. Things that you should be aware of, however, is you will still be responsible for capital gains tax
Okay.
in the event that that is not your first property or your primary property, and or if you've made a profit of over 2 million on that property, then you will pay capital gains tax. But if it's your first property and if your profit is below that, then you don't pay capital gains tax on that. The other things that you will pay is attorney fees, because the property will have to be transferred in terms of the process. So be aware of having to pay for attorney fees. Now, it's important to know that although this home is not bonded, you would still go through the same process in terms of registration, in terms of documentation. So whilst there's a big part that's not highly administrative, you will still be required to follow the rest of the processes.
Wow. Okay. I hope that Reshika has answered you there, Neliswa. And Reshika, in closing, right? What is one final advice on the series, this three-part series that we've had on financial wellness? What is just a parting advice you would give to the Vuga Nation on achieving financial freedom in modern South Africa?
Oh, that's an interesting one.
Because I mean, we in Youth Month, and you know what? We know with the youth today, the biggest challenge they'll ever face is the financial freedom that they need to progress and be successful in today's society.
Yeah,
So, yeah, I'd love to know what your advice is to the Vuga
thank
Nation.
you. So I would say, whether it is your mind, your money, or your property, ownership does not start with perfection. It starts with purpose and creating movement from clarity.
It starts with creating movement from clarity. Wow. Those are powerful parting words, and I am inspired, and you
Thank you.
have lit a spark in me, and I hope that you've lit a spark in everyone
I
who's
hope so
watching
too.
and listening on how they can, achieve a financial freedom when in their personal finance. And of course, Avuga Nation, that wraps up today's segment of financial wellness with Resheka Mahadow. So I hope you now have a clearer picture of the mortgage process, the true value of a bond originator, and practical steps that you can take towards home ownership and building lasting wealth. So a huge thank you to Reshika for once again sharing sharing her expertise and empowering us with actionable insights. So remember, every informed decision is a step closer to financial freedom. If you found today's discussion valuable, don't forget to engage and tag us, and tag obviously your friends, and share your biggest takeaway using the hashtag financial wellness and hashtag Vuga Breakfast Show. So stay inspired, and don't forget to check the caption on our social media posts on for more info on Reshika and her journey to helping people like you secure your financial
Thank
future.
you.
Reshika, if anybody wants to get a hold of you and start their home ownership journey, where can they do so?
Um, Generally on all the LinkedIn platform, social media platforms, and preferably at email is where you would find me, as I'm not always as active on social media. So Reshika at Forward Up, or Reshika at phoenixbonds.finance.